In this section, we're going to talk about what it takes for a customer to qualify for a business loan. Now, it's important that you separate the two. There's two main aspects of the finance suite. There's the business credit builder, where they're actually building their business credit. We've talked about this in previous steps, all the benefits, how they could build business credit regardless of if they have cash flow, credit, collateral, regardless of their situation, anybody can get business credit. Then there's the finance qualifier section of the finance suite, and this has to do with the type of business loans and business financing that's out there that they may qualify for that's independent from business credit. So it's important to note that as we walk through this section, everything I'm telling you has to do with them getting business loans. It doesn't have to do with them getting business credit. Anybody can build business credit regardless of what I talk about in this step. This step is only about the people that can get business credit and can also get some other kind of business loan or financing. So what does it take for somebody to get approved for business loan or financing? Well, I call this the 3 C's of lending. It's an easy way for you to remember who may be able to get a business loan right away and who may not. First of all, do they have consistent cash flow? Do they have money coming into their bank every month? Do they have more than $10,000 a month of money coming into their bank account every single month? The second C is credit. Do they have good personal credit? Yes, remember, they could build their business credit regardless of personal credit. But if they have good personal credit, that opens up even more financing options for them. Third, do they have some type of legitimate collateral? If they have cash flow of more than $10,000 a month coming in their big bank account, if they have good credit, or if they have collateral, if they have one of these three things, then they can typically get a business loan. They don't need all three. They need one of the three to actually qualify for business financing. So when we talk about cash flow financing, we talk about them using bank statements. They supply 6 months worth of bank statements. We look to see how much they have in deposits. And if they have more than $10,000 a month in deposits, they could typically qualify for revenue financing and merchant advances. Now, we don't do a lot of merchant advances because merchant advances usually require them to switch merchant accounts. We're not big fans of that. We do a lot of cash flow based financing or revenue financing where we just look at their bank statement for 6 months. Do they have more than $10,000 coming in there? If so, then there's a good chance they're going to qualify for financing. Now, if they happen to have good tax returns that show good revenues and good profits for a couple years, well, then that opens up even more financing, including alternative SBA loans. These are also sometimes offered through lenders, sometimes offered through private investors, where these are people that might not meet all the requirements of an SBA loan, but they may be close. They may have good credit. They may have good tax returns. And because they have good credit and tax returns, that opens up some financing options for them as well. They also might qualify for SBA or private money. So look, if they have bank statements showing more than $10,000 a month in revenue, they're able to get financing even with bad credit. But if they happen to have good credit and tax returns, that opens up these other options of alternative SBA, and private money, credit lines, those type of things as well. So when we talk about cash flow financing, it only looks at bank statements. This is the fastest, easiest money somebody's going to get. I mean, they literally can secure funding in 3 to 7 days, within a week's time period. Actually, they're the one that usually determines how long this takes. If they get us the bank statements quickly, if they get on the phone with the finance officer quickly, if they get the finance officer everything they need whenever they need it fast, and they're easy to and fast to respond to the finance officer, they get their money quicker. Again, they can easily get this within a week. Okay, it's easy money. They can get approved even with the 500 credit scores. As a matter of fact, the lenders in this space kind of prefer somebody that doesn't have great credit because they tend to be a little bit easier to deal with. They know they're not as lendable as somebody with great credit. So again, even down to a 500 credit score, somebody can get approved for this type of financing, and they don't need collateral to get approved. And all that's needed for approval is 6 months worth of bank statements. Now, if they accept credit cards, we're going to need 6 months of merchant statements as well, and they can usually get a loan amount equal to about 10% of their revenue. So if the company does $300,000 in revenue in a year, and they could verify that with deposits into their bank account, well, then that means they're going to typically get about $30,000 advance, about 10% of that revenue. If they did $1 million in revenue, they might get a $100,000 advance. If they do, $200,000 in revenue, they might only get a $20,000 advance. So they're typically going to get, on average, about 10% of whatever their annual revenue is. And this is a short-term financing. They're usually going to get 6 to 18-month terms. Sometimes it's as short as 3 or 4-month terms. Typically, they're given the option. They're usually given the option of getting a longer term and paying a higher rate, or paying a lower rate, or spending less, or being charged less on the money they're borrowing and getting a shorter term. So they'll usually have options to decide what they want to do. And most of the people that get into this kind of financing come back and get more and more and more. About 75% of the people that we do cash flow financing for come back when half of that money is paid back and get more money and more money and more money. They really are very good at using this kind of money to actually grow their business. So again, 500 credit score is accepted. They can't be in trouble, such as have very recent liens or be in a bankruptcy. They've got to have 10,000 a month in revenue or 120,000 in annual revenue, and that has to be verifiable in their bank statements. Sometimes you may ask somebody how much they have. They say, I have 15,000 a month coming into my bank. And then you look at their bank statements and they had 15,000 last month, but the month before they only had 9,000, and the month before they only had 6,000. So they're going to look at 6 months worth of bank statements to make sure that each month that shows that they have about 10,000 a month coming into that bank account. And again, they've got to be in business at least 1 year. So they need to be in business at least 12 months to get approved. And they need to have some deposits. It can't be like a real estate agent that has 1 or 2 deposits in their bank account every month. It's got to be somebody that has a lot of transactions, at least 6 or more deposits or transactions happening through their bank account every month, and they need less than 10 non-sufficient funds. Look, the lender's going to take money directly out of their bank account, and sometimes it happens daily, weekly, or monthly. We've got all different kinds of options from all different types of lenders. So they have to have the money in the bank account for the lender to take back as their form of payment. So if the person has no money in their bank account, constantly has non-sufficient funds, well, then they're probably not going to qualify. So they really need to have less than 10 non-sufficient funds. It's also important to note that, look, this is all about risk. So if you bring somebody in that has 10 non-sufficient funds, only 6 deposits, only been in business 12 months, and has a 500 credit score, that's a very high risk. They're barely even meeting the requirements. So again, the better terms they're going to get, the better chance of approval has to do with being a lower risk. These are the bare minimums that they would need to have to get approved, and they also should have a positive bank balance at the end of the month in their bank account. Now, most people you speak to are going to want a credit line, okay? But this type of financing is very difficult to actually get. A real credit line from a bank is going to require about 720 credit score to get approved, and they're also going to have excellent financials. They're going to have tax returns that show good revenues and profits. Most business owners write off everything they can at the end of the year, so they have very little profit and they pay very little taxes. Well, if somebody wants a real credit line, they're going to have really good credit, really good tax returns that show really good profits and actual revenues. Okay, now there are some other opportunities to get credit lines. For example, if they have collateral such as inventory, that opens up some credit line options. And I just talked about cash flow financing as low as a 500 credit score. That type of financing with a lower risk deal also offers a credit line as well. So maybe somebody has, $200,000 in revenue per their bank statements. Their bank statements look good. They have positive ending balances. They have a 650 type credit score. Those people sometimes are now being offered credit lines as well. So there is some other types of alternative financing credit lines through cash flow financing and if they have collateral. But for the most part, the real credit lines that most entrepreneurs want require good credit and good tax returns for approval. If they don't have that, they're just not going to qualify for credit lines. So hopefully that gives you some information of exactly what it takes to qualify for if they have actual cash flow financing. So again, in the next video, in the next section, we're going to talk a little bit more about what the other C's. What if they have collateral? What if they have good credit? What are those options? But in this video, we got a good chance to just talk a little bit more about what it takes to qualify for cash flow financing, the 3 C's that you need to know to get somebody approved, and what it really involved with a credit line so you know exactly how to properly qualify your customers for business financing.